Robert Kiyosaki warns investors to prepare for war. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. I want to look at this article from news.com.au discussing, some predictions or warnings from Robert Kiyosaki, author of Rich Dad, Poor Dad, and, big property bull. Now, I'm a fan of him. I really am. But he seems to have just, gone off the deep end, or is milking the fear brigade. The doomer porn fear brigade to attract attention. And I think that's what this article is, because, of course, this is advertising at the end, something he's involved with. But still, let's go through it and then look at some of his other predictions he's made. Let us know in the comments, guys, if you're fans of Robert, if you've enjoyed his stuff. I mean, his book is great. I read it years ago. And a lot of people really like his board game as well, particularly for teaching kids. Let me know if you've used it, because I'm tempted to buy it. Rich Dad, Poor Dad author and owner of more than 8,000 properties, Robert Kiyosaki, has warned of an imminent financial disaster and how Aussies can navigate it. Now, he's warned of financial disasters several times. Rich Dad, Poor Dad author Robert Kiyosaki has warned an economic crash worse than the 2018 recession is coming, and Australia's negative gearing policies are a form of Marxism. In an exclusive interview with the Daily Telegraph, the best-selling author said the world was on the brink of a major change, and this disruption would hit the global economy. He pointed to the rise of China, America's waning influence, and internal divisions, and years of Western governments printing too much money as major red flags. Now, it's interesting, as he would call negative gearing a form of Marxism. If you think about it, it's the state encouraging private investors to, in many ways, provide social housing. What do you reckon? What do you think? I'm not entirely a fan of negative gearing. I think the problem I see with it is that it incentivizes investment in loss-making property. That's essentially what it does. It incentivizes bad investment. So we get to the point now where so much of the wealth of our nation is in property, where so much of property owners now have significant political influence. And what incentive is there to invest in business? And then we can see how our economic complexity goes down the toilet, guys. That's just how it is. So I remember talking to an investor who was a staunch, who wasn't a lefty, let's just say, but who would vote Greens, because that will limit development around his investment of properties and keep the rents and prices up. You've got to be strategic. We are living in the time of the greatest change in economic history, he said. Something is happening in the world that hasn't happened before. Mr. Kiyosaki explained that China was ascending to take over US leadership of the global economy, and this was increasing the threat of a violent conflict. It was also increasing the prospect of some form of economic disaster, but he did not elaborate on when it would occur or exactly how severe the crash would be, only that it would be worse than 2008. Well, is that really saying anything, to be honest? If you think about it. 2008 was the first big crash, and a bigger crash is coming, he said, explaining that like in 2008, world governments were printing too much money. Mr. Kiyosaki, who was reported to own more than 8,000 properties, said the next financial crisis would provide opportunities for astute real estate investors. I'm pessimistic about a crash, but it's also the best time to get rich, he said. Entrepreneurs are going to win. But Mr. Kiyosaki also cautioned that property prices may tank when another economic disaster hits, and prudent investors would need to be prepared to ride out a downturn. I mean, this is just advice. Even if forget about the whole prediction thing. If property prices crash down, are you going to just sell? How many people are going to sell? There's all these people concerned that interest rates are going to hit to 20% in Australia. Well, if that happens, then you'll be earning good money on your cash reserves that you have as well. If property were to cash 80%, I see some people making these comments. How many of you would find money, no matter how you could, to buy a bloody bargain property? I would put my extension renovation off, just take my cash and buy another property, move in there. How many of you would do that? A lot of you would. There's so many people there that have reserves, have money. How many of you would sell your shares to get into a property if there's an 80% crash? Come on. People would find ways. How many of you would cash out some Bitcoin to get into property if it crashed that much? It doesn't last, guys. If you're counting on property always going up, you could be wrong, he said, adding that the opportunity for investors would be the drop in values followed by a gradual recovery. If there is a crash, a lot of bargains will be available, he said. He's not really saying anything here. Mr. Kiyosaki was speaking with the News Corp Australia ahead of a property summit he was hosting alongside local investor George Markowski. The free virtual workshop will be held on January 22nd. Okay, so this is the event that he's involved with, and nothing wrong with that. People will get well-known people to talk at their events, and I've gone to some of them and seen them, and then I realized the people that were putting them up are pretty much con artists. Not that I'm saying that George is, but you got to watch some of these people that use dubious means at getting property information, and I think you all know who I'm talking about. Mr. Kiyosaki has dabbled in Australian real estate, including purchases in Sydney and Brisbane. He said he took issue with some local government policies around taxes. They included negative gearing. I don't like government support, he said. I'm a capitalist, not a Marxist. My concern is that with negative gearing, it's monetizing debt and property values are overinflated. It's not real. It's got to make economic sense. Yeah, but we saw Shorten try and get rid of it. But, well, no, he didn't get rid of it. He wasn't going to get rid of it. Sorry, that's wrong. He was going to get rid of it for all of the younger generations that hadn't taken advantage for it. All the older generations that already had properties that they were negative gearing, they still had those perks. Bullshit, isn't it? Utter bullshit. Oh, we'll keep all these perks, these tax perks. You young people, your next generation coming up, those of you that don't have investment properties, screw you. I'm glad he lost on it. I'd rather we keep negative gearing than get rid of it like that, or half get rid of it. They need to phase it out over a decade, where, you know, when you buy a property, you've got 10 years to negative gear it. But anyway, it's all a mess. This is what happens when you artificially intervene in the government using the tax system to influence people. Then people respond and take advantage of it. The problem is the more complicated you make our tax system, the more people will devote time to getting out of paying taxes rather than being innovative. People think we're an innovative nation here in Australia. Utter bullshit. Not anymore. The Rich Dad Poor Dad author added that Australian taxes on property purchases were excessive. I've been coming there since 1972. Every time I saw them raise taxes, it makes it harder. Aussie is worse than California. No need to insult us there, mate. He said school education failed to equip most Aussies with the tools they would need to make money. Yeah, but that's everywhere. And while I'm an advocate for increasing financial literacy, I don't think schools are the solution. They've got so much stuff in the curriculum now. You can't fit any more in it. We need to take stuff out. We really need to just reduce the Australian curriculum. When I meet most Aussies, they're punters. They just buy Bitcoin hoping to get rich quick. They look at the small picture. What I'm talking about is the macro and historic picture. We're on the verge of war right now. Let's have a look at some of the comments here. Scott, abolishing negative gearing completely, then watch how many empty houses hit the market. Then rain on the people parking and hiding million in empty houses to avoid tax. This guy represents everything wrong with capitalism. No, he's 74 years old. The average lifespan is 81 for men in the US. He has 7 or 8 years left. Lucky guy. 8,000 properties. Oh, a bit of jealous comments here from people, you know. So let's check out some of his former warnings. 2011, if the US keeps printing money, the dollar will crash, creating chaos and confusion. This leads to war and world hunger. So he's been making these claims before, guys. 2011, for the educated, an economic crash is the best time to get rich. Guess what? The crash is not over. And we can see some other ones here. I predict the next stock market crash to take place in 2016, in 2011, 2017, and another sign of a real estate crash is coming. A giant stock market crash coming in October. Why? Well, let's look at this against the S&P 500 here. Here's the crash. Guess the crash is not over. Okay, I guess he was out a few months. Could you call that a crash? Here's another one. I've been predicting this since 2002. Here you go. Yeah, so if you overlay it with the claims that he's made with the S&P 500. Why wasn't he predicting it right here? And is this the biggest crash that he predicted? I mean, here's the issue, guys. Let's have a talk about this. Negative news gets attention. It gets views. It gets clicks. It gets people attending events. And then they'll buy other products, courses, workshops, those type of things. Just be wary and understand that if you consume constant negative news, constant economic fear news, you potentially could get stuck in a bubble and a self-fulfilling prophecy, on your own scale. I don't know, guys. I've become quite skeptical of a lot of the doomer predictions because now, in the last 2 years, we're seeing prediction after prediction just fall over. The economy is a complex emergent system. I would advocate for limited government intervention to allow the market and the invisible hand the freedom it needs to correct and adapt. But I can't see there being political will for that in Australia. And, are we on the brink of war? Potentially. Is there a potential huge market crash coming? Maybe. Would the government intervene to prop up the market? I think there's a lot of precedent for that. What do you think, everyone? Would you go to his event? Do you think he's been correct with his crash predictions in the past? Or is he just milking the fear to get attention? Tell me what you reckon, guys. I like him, but yeah, I'm a bit skeptical about all the doomer predictions now. Anyway, check out this video about young people making bank on the stock market, because it's not all about property. Anyway, take care, guys. I'll see you next time. Bye for now.